Looking back at 2025, the real estate market certainly didn't follow in a straight line. We started off the year with a lot of optimism. We went into January with momentum. Rates were coming down and sales were picking up. And then all of a sudden, tariffs happened and everything slowed down. We lost that momentum. Then in June, things started to pick up again and we thought that we might be seeing a turn in the market. However, unfortunately, that was short-lived, and by the time we hit the fall, things started to slow down again. Now, this certainly wasn't a collapse, it just wasn't the rebound that we were hoping for. In Guelph, our market remained a lot more balanced than it did in a lot of other larger Ontario cities. The average sale price was $790,000 compared to $796 in 2024, so a modest 1% decline. The total number of sales also eased slightly, with 1,585 sales in 2025, down about 5.7% from the 1,676 sales that we saw in 2024. Detached homes, semis, and townhouses held their value better, while the condo market declined more significantly. For Kitchener-Waterloo, the average sale price in 2025 was $734,000, down 4.3% from $776,000 in 2024. The total number of sales was 3,786 in 2025 compared to 4,155 in 2024, an 8.8% year-over-year decrease. Inventory also built up more noticeably here than Guelph. In Cambridge, the average sale price in 2025 was $728,000 compared to $754,000 in 2024, so a 3.5% year-over-year decline. The total sales volume in 2025 was 1,447, which was down from 1,586 in 2024, which represents about an 8.8% year-over-year decrease. As we head into 2026, the market feels stable but a bit cautious. A lot of economists are predicting that we're going to see an increase in the number of sales in 2026 compared to 2025, but fairly modest amount. And we're also anticipating that prices will remain relatively stable, maybe slightly up or slightly down, but not a dramatic change from this year. The key opportunities right now entering into 2026, first of all, upsizers. This is a really great opportunity. You can sell your house in a hotter price point and buy a house in a slower price point, and the gap between what your house is going to sell for and your more expensive house has likely shrank than what it was years before. This is also a really good time if somebody's looking to downsize from a freehold house and buy a condo. Again, that gap has increased. You're going to be able to pull out a lot more equity. Investors, this is a really good opportunity also. We're seeing great cash flow as rents have remained very stable, prices have come down, and we're starting to see some interest rate relief also. If you're planning on selling in 2026, you may be better to get your house on the market within the first quarter of the year. This is because we're going to have less competition and we're not anticipating a massive surge of buyer demand. So by the time we hit that late March going into April and May market where you see a huge dump of new listings coming on the market, you might see our market start to soften as there's a lot more competition and not enough new buyer demand to help keep pace. We're anticipating 2026 isn't going to be dramatically different from 2025. It's going to be a similar market where it's important to price the properties correctly, make sure they're presented at their absolute best, and that you've got strong marketing backing you. If you're thinking about waiting for a noticeably stronger market, it might take a little longer than what you're expecting.